Hey everyone, this is Dave Dubeau with another episode of the Property Profits Real Estate Podcast. Today, all the way from beautiful Brampton, Ontario, we've got Mark Baltazar coming in. And Mark is an experienced multifamily investor. And the reason I'm really excited about talking with Mark is because of the size of properties that he focuses on. So they're not the real small multifamily, so he's not looking at duplexes, triplexes, fiveplexes, and it's not the huge big ones that just seem too out of reach for most folks. He's focusing on properties from 12 to 20 units. I'm really excited about that because my impression is, that's big enough to start getting a really good bang for your buck and small enough that you're not having to compete for properties with REITs and the real big guys. So I think it's kind of a really nice sweet spot. So Mark, welcome to the call.
Yeah, thank you. Very excited to be on the call and really appreciate you hosting me. And you had some really great guests. I follow your show, I listen to your show. So
thanks.
Really honored to be a part of it. Thank you.
So hopefully I didn't steal too much of your thunder there, but that's kind of gets into my first question for you is why do you like to focus, or what are the big benefits of focusing on this size of properties, like the 12 to 20 unit type properties?
Yeah. So when I started investing 5.5 years ago. I didn't start in multifamily. I started with, in fact, my first foray was going to be wholesaling. That wholesale deal turned into a flip. And then I started holding some properties along the way. So a few duplexes. I had, fourplex was as large as I went. And, my background is, a business owner, ran a consulting business for a number of years. And so, business valuation and financials kind of always made sense to me. And I think the light bulb went off for me for apartment buildings, really because of the way it gets valuated, the way they get appraised and the way lenders value them and the way, value is created, which is, primarily through income, versus a comparable approach such as single family. And so I felt that as an investor, as an operator, you have a little more control in terms of what you can do from a valuation standpoint. The simple math is just increase net operating income, and the value of your building goes up. Not so simple to execute all the time, but that's essentially kind of what we're doing, is increasing net operating income to generate, higher returns.
Well, that's awesome, Mark. So again, for folks that aren't super familiar with the difference between single family homes and multifamily properties. So what Mark was saying is, typically for a single family home, the value of that property is based on whatever similar type properties have sold for recently in that area. There's really, that's about as logical as that gets. And unfortunately, in the residential market, single family home market, a lot of the value is based on emotion, right? It's what's going on in the economy, what's happening, what's with the local real estate market like. So that's why, you see property prices going up drastically one year and then going down quite a bit another year in different markets.
Yeah.
Versus multifamily properties, it's a much more logical valuation. The banks look at these kind of properties as almost like a little business unit. So the way that they're really valued is, quite frankly, on how profitable the properties are, how much cash they're spitting out. So the cool thing is, and correct me if I'm wrong, Mark, what you're doing is you're finding these multifamily properties, kind of small to medium-sized multifamilies, 12 to 20 doors, that are underperforming. Perhaps the rents aren't where they should be. Perhaps they're being mismanaged. Perhaps there's some deferred maintenance, perhaps all three of the above. And you're able to go in there and buy them for a pretty decent low price because the value is based on how profitable they are, and they probably aren't very profitable. And then you guys go in and turn around and make them more profitable and increase the value. Is that the gist of it?
Yeah, that's it. It's the value add approach, and yeah, I liken it to a business acquiring another one. They're acquiring it for a few different reasons, but acquiring it, let's say an underperforming business, putting in a new management team, developing new operational systems, just making it a better or well-oiled machine.
Mhm.
And, once it starts spitting out kind of more cash, then, reaping the rewards from that, whether it's through a refinance or selling it, it's cash flowing a little bit better. The interesting thing, and this is not the case across all markets in Canada, but at least in Southern Ontario, I know for sure, um, while they're underperforming, they're not always undervalued from a pricing standpoint. So it is
There's so much
fairly,
demand for these things.
there's a lot of demand, right? So you are, I guess technically, quote unquote, overpaying, for it at the time of acquisition, and you're essentially, buying the upside. So you're paying a little bit more because there's upside available, if you can extract it. And so it is an interesting kind of strategy, whereas in single family home, undervalued typically is you're trying, you can maybe get it at a price that's below what it may get on an open market from a private standpoint. In apartment buildings, undervalued, you're almost paying a premium for things that are undermanaged because of the upside.
Yeah, I guess that depends on the markets you're looking at, because
Yeah.
I've spoken to investors across the country, and
Mm-hmm.
my God, I was just talking to actually one of my clients
Mm-hmm.
who was able to pick one up. Now it's in a smaller town in Alberta, so the economy's shaky, right? But
Yeah.
I
Yeah.
can't remember. It was ridiculous. It was like 20 grand a door or something.
Oh, wow.
I mean, just
Yeah.
stupid.
That's crazy.
And with owner financing kind of stuff
Wow.
too.
Wow.
So, but yeah, I mean, if you're focusing on Southern Ontario,
Yeah.
that whole Windsor to Quebec corridor there, I believe last time I heard that's where 80% of the population is, and that's where 80% of the multifamily properties in Canada are located. So you got a lot of competition for those kind of properties, I would imagine.
Yeah. Absolutely. Like even the last, I have one under contract now, 12 unit that's closing at, in next month in July. But prior to that, putting offers, quite frequently. The last 3 offers, it was multiple offers. And we knew at least 1 or 2 and other investors, that were bidding for the same project. So, small community, from an apartment building standpoint.
Mhm.
But it just shows how competitive it is in this market.
Yeah, definitely. So, okay, so you're getting into these properties, you're not necessarily getting a great deal going in. So, really, for you and your investor partners,
Mm-hmm.
you have to go in and turn around pretty quickly. So, what do you typically, maybe just to give us an idea, can you walk us through an example of a deal that you've done in the last few years? And, what was the purchase price? What did you do to it? What were you able to if you were able to increase the value enough to refinance it? How does that kind of look, or what does your model look like?
Yeah, so I can speak to one that was acquired 2 years ago or so,
Okay.
which is actually just a little under 2 years.
So
14
about
unit.
2018, sometime in 2018.
Yep, yep.
Yeah.
Towards the end of 2018, 14 unit building. We're actually coming up to a refi. So we did a short term mortgage, so kind of some bridge financing for 2 years to allow us to turn over units.
Yeah.
That 14 unit building, we're turned over 4. We're about to get into probably 5 or 6 before the end of the refi. And so just kind of from a financial standpoint, that building was purchased for 1.7 million. And the average rents at the time were $780 or so per unit, which is, this is in Hamilton, so fairly low. And we're converting, those are 1 bedrooms. It's 12 ones, 2 bedrooms. 1 bedrooms in that area, we've already kind of reached what the market max, I think, is, which is about 1,400.
Wow,
So
well, that's huge. That's almost double what they're
yeah,
getting rented out for. Yeah.
yeah. There's some units that are, where tenants are paying 680, 750. Some are 900 on average across the 14 units. It was about 780. So we're kind of moving that up to 1,400. And so the value lift is massive. And so so by the time we refinance, which is in a few months, we'll have 6 done, which provides a significant amount of equity for us to pull back out.
So what do you think the valuation will be when you're ready to refinance, realistically speaking?
Yeah, so we're probably looking at we're probably looking at 1.7, so probably a 2.2, 2.3 million.
Yeah, so you could be increasing the value by five or six hundred
Yeah,
thousand dollars
yeah.
on this property just by, well, I don't know. Did you have to do any major renovations to those 6 units that you've turned
Yes.
over? Oh, okay.
Yeah, yes. So we did. So this building is about 50, almost 60 years old. So, it's been through a few decades.
Yeah.
Most of I say all the units need a significant renovation. And so our renovation package for that particular property, is costing us anywhere, depending on the unit, they're very similar, about $33,000 per unit. And then that's giving us, so in a unit that was traditionally being rented for, let's say, 750 or 800, and getting that lift to 1400, it's giving us, a valuation lift of about 150 to 160,000. So we're spending, 30,000 to kind of make, 160 or net 130 kind of on the back end. So, I know some models, are $15,000 renovations, some are more. This one for 30,000, we're able to get the 1,400, even 1,450. We're actually toying with right now in terms of market rents.
Well, I mean, who wouldn't do that? If you can put 30 grand, 33 grand in and
Yeah,
create 130,000 in increased value, that's pretty sweet. That's
yeah,
pretty,
and
that's,
I think it's the and it was one of the components of multifamily that I really understood, but also I think where the light bulb went off is you put a dollar in, or you increase your net operating income by $1, your valuation is a multiple of that, depending on which market you're in. In the market I'm speaking of, the valuation, from a lender standpoint, is about at a 5% cap. So every increase in NOI of $1, we're getting a 20 times, multiple on that. And so, whether it's 20 times or even 15 times, like it's still, it's a pretty significant lift based
yeah. So what
on.
you're saying is you increase your net operating income by $1, that
Yeah,
increases the value of the property by $20,
that's right.
right?
Exactly.
That's,
Yep.
that's,
Yep. Yep.
there aren't too many other investments where you can do that kind of, get that kind of leverage. That's awesome. So
Yeah.
Mark,
Yeah. Mm-hmm.
time flies when we're having fun. We got about four minutes left here,
Sure.
my friend. So just out of curiosity, what are you guys doing to find these deals? Are you
Mm-hmm.
relying primarily on commercial agents? Are you using agents and beating the bushes yourselves to try and find some private deals? How do you guys get your deal flow?
Yeah. So it's primarily through a network of agents.
Okay.
So so I have a partner in the business, and we've looked at. So again, my background was flipping, and I bought. I'd buy private deals all the time. I marketed myself for motivated sellers, and that worked. And so that kind of I had that system kind of going. I still have that going. Um, in this case, we haven't really spent a lot of resources in going direct to seller because our network to the brokers is very strong, and so they're doing that. And
Mm-hmm.
so we're tapping into a fairly strong agent slash broker network in the multifamily apartment space, and so that's where we get that's so I mean these are typically kind of quote unquote off market, so they don't hit the MLS, but they do get traded within the network of
They're kind of like
our
pocket
building
listing,
business.
kind of like
That's right.
pocket listings for commercial property.
Absolutely.
Yeah.
Exactly. Yeah, exactly.
Sweet. Very, very cool. And then, okay, so it's you and your partner, and you've been doing this for a number of years now. Obviously, you're working with investor partners to help
Mhm.
get the capital for these kind of deals. What have you found? What have you guys found that works best for you for finding investors and raising capital and staying out of trouble with the Securities Commission?
Yeah, that's good. Good question. So, a lot of our early partners, from a capital standpoint, came from those who had invested with me before, from
So,
flips and
friends and family kind of stuff.
yeah, easy
Yeah.
transition.
Yeah.
And then my background's marketing, so I ran kind of a branding strategy agency for a number of years, and so I kind of understand the concept of content and
Mm-hmm.
push and pull marketing. So we put out a lot of content, a lot of free webinars, and it really is for education, kind of putting it out there. That allows us to build a database, an email database that we then continue to put education out to. From there, people ask us, do you have deals? Or if we're looking for partners on some of these deals, it really is a quick email to someone that's been engaged with us over the last number of years. And so it becomes an easier yes now. It's not a cold call. They know who we are. They've watched us. In our last project, we've had a few investors that have literally and I can see, through our email system, how long they've been with us and how many webinars they've kind of seen. And they've seen a lot. They've seen 3 years worth of content, right? And now in fact, the pandemic and just the volatility of the stock market is really kind of what triggered, I better put my money into something safer.
Exactly. Yeah.
We've kind of educated and trained them to believe, which we believe, that this asset class can help do so. So it's a combination of content marketing. Really is a big part of how we're attracting partners. Yeah,
that's smart. So basically, you've created all this content, you've created a list of people, and then you keep that communication going.
Yep.
Again, marketing background, right? So you're creating that relationship over time so that people get to know you, like you, and trust you, and they see that you guys are a good choice when it comes to investing their money. One more question before we wrap up and let people know how to get a hold of you, Mark. How do you guys typically structure a deal, ownership wise, when you're working with investor partners? Let's say, for example, that $1.7 million property, obviously you needed, 20-25% down, property transfer fees, you need money for getting studies done, and then you need capital as well to do the renos. How are you, in a nutshell, how do you guys structure that kind of a deal?
Sure. So we've evolved over the last few properties. That one in particular was a joint venture agreement. Mm-hmm. The purchase was done through my own capital and my managing partner's capital, and then we brought in people afterwards into the project.
Perhaps not like a second mortgage type thing after the fact? Or?
We did second mortgage, and then we also had other people that just wanted to partner in the project, and so we kind of did JVs afterwards. Now, in our most recent deals, and this most recent one that we're closing on, we're setting up a corporation, and our capital partners, as with us, are shareholders in that corporation. So kind of more of a corporate structure that we've created.
Got it. And is everybody having to help qualify for the financing, or do you and your partner qualify? How does that, just out of curiosity, how do you typically work that way?
So just myself and my partner, my operating partners qualify for the mortgage. A couple of things, it's easier that way versus, trying to collect financial information from a number of people. Also, there's some capital partners that just don't want to, showcase their financials, right? And it's kind of, more of a headache. So we're qualifying. So we're only getting into things where myself and my partner can qualify for. And then, so we'll take that burden off of our capital partners. We're doing kind of all the heavy lifting. And for our capital partners, it's really just hands-free for them, and kind of sit back and collect checks.
That's the way it should be. All right, Mark. So I know you guys are starting also to teach and train people or coach people about investing in multifamily properties. If people want to find out more about you and about that, what should they do?
Sure. Yeah, they can go to our website, peakmultifamily.ca. We have our webinars there. We have our coaching, program outline there. Lots of free information, blog posts, and all of our contact information is there.
Great stuff. Mark, thank you very much. It's been a lot of fun.
Awesome. Thanks so much, Dave.
All right, everybody. Take care. We'll talk to you on the next episode. Bye-bye. Well, thanks very much for checking out the Property Profits podcast. If you like what we're doing here, please head on over to iTunes, subscribe, rate us, and leave us a review. Be very, very much appreciated. And if you're looking to create a regular flow of inbound investor inquiries about your real estate deals, then I invite you to attend one of my upcoming live online demonstrations. And you can check that out at investorattractiondemo.com. Take care.